Trend surges nearly 3% after Citi issues a bullish note on the stock. The brokerage has issued a buy rating target price at around 9,250 rupees per share.
Investec issues a buy rating on IEX with a target price of 215 rupees a share. The stock surges after 2 days of losses as the brokerage believes that the company will continue to deliver volume growth of around 44% going forward.
Crompton corrects post analyst meet. The stock is down more than 4% even as brokerages like MSN and Nomura issue equal weight and buy calls respectively.
Hero Motors slips in trade. This after brokerage UBS issues a sell rating on the stock with a target price of 3,350 rupees a share.
Hello and welcome to Chartbusters. I'm Nigel D'Souza. Joining me today is Vivek Iyer. Well, Vivek, the market's trading in the green, up close to around 50 points odd, but a lot of portfolios may not be feeling too good because, of that index that's on the top of you. The mid-cap index is trading with a cut of around 0.6%, and the breadth of the market is in favor of the bears. So headline index positive, but otherwise plenty of stocks losing the ground a little bit.
That's right. A whole host of stocks, and like you mentioned, the portfolio not looking good. Typically because a lot of mid-cap and small-cap stocks are part of individual portfolios, and that pocket of the market, in fact, for the last couple of trading sessions, have actually seen quite a bit of selling pressure, despite the fact that benchmarks are in the green. But let's welcome Sachidanand Uttekar from Trade Bulls for a technical check on the market. Good morning, Sachidanand. How are you looking at the markets, and how are benchmark indices looking to you currently?
Good morning, Vivek. Good morning, Nigel. I think clearly the market is looking very steady. In fact, it has been a very strong month of September. We've already seen some strong gains reinstated by Nifty Bank as well, which has been outperforming. But if you look at today's data itself, there's a good amount of conviction that 26,000 level should hold on throughout the day. The OI cluster at around 26,100 could be at play, and once we see the Nifty, trending near the same, the probability of a breakout remains open. So we are of the opinion that the market trend has been very steady. The momentum should take the indices of higher further towards 26,270 eventually, and that's why we are still recommending building long positions here. The base at 25,950 looks very strong from a trailing stop loss perspective. So keeping a stop loss somewhere close to around 25,935, one can still deploy long positions here. From an intraday swing perspective, we may see an immediate swing towards 26,110, but eventually we see a further rally towards 26,720, 26,270. When we look at Nifty Bank, I think it looks more consolidative. We have a very strong support built up at 53,900, but on the higher side, there is ample of congestion at around 54,250, 54,400 kind of a zone. So probably we may see Nifty Bank, consolidating within this range, but Nifty may see a very strong rally.
Okay, all right. What about individual stocks?
Nigel, I think the focus has to be on pockets wherein there is a good short covering data. First of all, if you look at some of the IT stocks, they have been consolidating throughout this particular series. We are looking at HCL Tech now. If you look at the data for the last 4 weeks, the stock was consolidating within this band of 1750, 1800. If you look at the 60 minutes chart, it looks like a broadening structure in place. The OI break at around 1800 has driven some momentum. So we are expecting this particular momentum play to continue. We are of the opinion that there could be a very strong confident rally towards 1870 on the higher side. That's why we are recommending building long positions in HCL Tech October futures. The stop loss for the trade should be placed at around 1785, and a positional swing is expected towards 1870. The second stock on our radar is Dr. Reddy's. Now, if you look at the overall structure, the stock has already given a breakout from a falling wedge formation. It has managed to sustain and recover about its 50-day exponential moving average, which is placed somewhere close to around 6,700. There's a RSI breakout on the daily scale about the 50 level, so which is a good strong sign of a recovery. We are expecting this particular momentum to continue towards 6,900. That's why we are recommending building long positions in October futures here, keeping a stop loss somewhere close to around 67.10.
Thank you so much, Sachinandan. So, HCL Tech and Dr. Reddy are the two stocks on your radar. Let's now shift focus to our special segment where we get you a few ideas for profit from Money Control Pro. Lekha Badlani of moneycontrol.com joins us now to talk about a stock that she is tracking closely. Lekha, over to you.
Stock pick is Rainbow Children Medicare, which is the largest pediatric hospital in the country in terms of bed capacity. Now it further plans to increase this capacity by 35% in the next 3 years to reach approximately 2,600 by the end of FY27. Now Rainbow has achieved a revenue growth CAGR of 19% in the last 5 years, and the management expects the momentum to continue and has guided to a revenue growth of high teens for the current fiscal. Now, most of this growth will come through volumes, as Rainbow is seeing good demand traction across its units, while growth in ARPOB would be limited given the price hikes already taken last year. Now, the new hospitals of less than 5 years are currently operating at a lower occupancy, and few of them are yet to make operational profits. However, 4 of the recently commissioned hospitals should achieve an EBITDA break-even by the end of FY25 or first half of FY26. With the ramp-up of new hospitals, Rainbow should see an uptick in volumes, occupancy, and margin improvements in the coming years. Its obstetrics and gynec segment also continues to grow well. Now, we think with the rising middle to high-income group, preference for specialized childcare services, and the growing preference for assisted reproductive technology such as IVF, holds ample synergies and growth opportunities for Rainbow. Now, trading at an EV/EBITDA of 24 times FY26 estimates, we think the valuation is reasonable to accumulate the stock for the long term.
Okay, Lekha, thanks a lot for that. For the time being, though, we slip into a short break. Come back. We'll continue to focus on markets. We'll also get you some stock-specific action. Welcome back. Here tuned into Chartbusters here on CNBC-TV18. Well, in an exclusive interview, my colleague Ekta caught up with Prem Kumar Nair, the Group CEO at IHH Healthcare, and began by asking him about Fortis acquisition and the long-pending open offer for Fortis Health. Let's hear out a slice of this interesting conversation.
I think this matter has wound its way through the courts, Supreme Court, right, and now it's with the Delhi High Court. I would say a lot of the issues have been resolved, right? And this is probably the last final matter, the forensic by Delhi High Court, which is ongoing now, all right? I won't comment on it, right, because it is going through the courts at the moment. And we anticipate that once it is resolved, we'll let the court process, go through its, usual route. We will, and then we'll have to decide what to do next. The open offer was at $170. Fortis today is at 600 plus, right? So we will have to make a decision on how we move forward. There are many ways in which we can increase our stake, as you know, all right? But one thing's for sure, we will be staying in India and we will be staying with Fortis.
So there's no chance of selling out that 31% stake?
Absolutely not, all right? We have got Fortis, we've got Gleneagles, we've got twin engines of growth in India, and given the attractiveness of the Indian private healthcare market, we intend to stay and grow in India.
But what do you think about this long journey of litigations, which is still not over at this point in time? Was there a time where IHH rethought its decision of acquiring Fortis?
Well, to be very honest, I think there were times when we were wondering what we got into, right? But over the years, most of the matters have progressed and resolved, one by one. There were several matters going on at the same time, right? So most of them have been resolved, right? And I think we feel, right? I don't want to judge what's going to happen, but we feel that we are at the tail end of this matter, all right? And we really will have a chance to go ahead, all right? Both with Fortis and with Gleneagles, all right? And increase our presence in India.
So when do you expect to hear back on the open offer?
No, can't predict that for the moment.
Probably by the end of this year or
Hopefully
next year?
6 months to a year, hopefully. Yeah.
Okay. Well, this is a hypothetical situation, but if in case the open offer does get approved,
Yes.
like you mentioned, the price was 170 rupees. Today,
Yeah.
it's over 550 or 600 odd rupees for Fortis in terms of a price. What will IHH do? Will there be a revision of an open offer price on the higher side? What is the decision?
Okay, given that we would like to increase our stake, I think we would have to revise, right, our offer to the other shareholders. So that's probably what it will take for us to do it.
Okay, so you will probably revise the price higher
Yeah.
for the open offer if in case you do get that permission to go through. On the other hand, if in case the open offer does face hurdles again, what will IHH do? Will it go through any other route in order to increase its stake? Because currently you do have minority stake.
Yes. Well, first of all, I must say we are happy with what we have at the moment. As I said, we control Fortis, right? Fortis is improving year by year, operational metrics, financial metrics. There's no restriction to their growth. As you can see, they bought a hospital in Manesar, they disposed of 2 hospitals in the south, right? And they're looking at more acquisitions. They've got a plan to expand by 2,000 beds from their current 5,000 beds purely by brownfield expansion.
Correct.
Right? So that's their same store growth, essentially. Right? So Fortis can continue to grow, all right? And we hope there will come a day when we have, few years down the road, when we have between the 2 entities about 10,000 beds, all right? That will bring us maybe into the top 3, right, hospital groups in the country. That's our aspiration, right? So I think Fortis can, even with the stake we have now and the current growth trajectory of Fortis, it will continue to grow, right? But of course, we would like to increase our stake, either increase the open offer, we can do a creep, all right?
Creeping acquisition, 5% every year.
We can do that, 5% every year, we can do that. Down the road, maybe we can look at folding Gleneagles into Fortis, that's another option.
All right, well, interesting conversation there. They could possibly look at revising their open offer price and also look at other ways of, increasing their holding in the listed entity Fortis, though currently they're quite satisfied with what they have. We'll keep getting you snippets of that conversation all through today's training session. For the time being, let's slip in a short break. We'll get you more on markets and stock-specific action on the other side.
Welcome back. You're watching Chartbusters. The one stock that's seen quite a bit of a correction today is PB Fintech. The company reveals it plans to enter the healthcare space. Winnie is here with more details.
Absolutely. It's not just been today that we're seeing PB Fintech fall, but for the last 4 trading sessions, we've seen a sharp fall coming in PB Fintech, almost 15% decline in just the last 4 trading sessions. Now, obviously, the entry into healthcare space, we understand that they want to make this entry. They're exploring that idea, and they want to maybe look at opening up some own chain of hospitals as well. If that does happen, that would be more capex heavy. They would require a lot of investment on that. So because it's going to, require a lot of capex, we're seeing a bit of a fall coming in. Short term, yes, increase in capex, but long term, there's a value creation that comes out. So yes, clearly right now pressure is coming in on the stock because it'll be capital intensive. Company came out with a clarification also last evening saying that they want to explore, they are looking to explore this. They will continue to look to explore these ideas. But as of now, there's no decision made on this front. So yes, PB Fintech is a stock that we're keeping an eye out on. Last 4 trading sessions, a 15% decline.
All right, thanks a lot for that. We'll wait by to see whether or not the management can join on the channel and clarify their position as well as rationale behind this kind of thought. Well, let's focus on Crompton. That's the other one that's under pressure, post an analyst meet. Brokerages, well, the verdict is split out there. Upasana joins us to tell us more about that. Upasana?
Well, that's correct. Crompton remains in focus as company recently held its analyst meet, and few of the brokerages have highlighted some of the important key takeaways. Now, Morgan Stanley has given an equal weight with a target price of 323 per share. It says that the company has given a long-term revenue growth guidance of mid-teens out of which it expects 10 to 12% from its base business and 2 to 3% from its new business. The company also expects EBITDA margin to improve by 200 basis points.
Okay. All right. Thanks a lot for that. We'll come back to Upasana, in fact, get more details on that particular meet. Let's speak about Vedanta. Vedanta is going to be considering a fourth interim dividend. So that's going to be interesting, right? That's what's keeping the stock elevated. Now, as we know, it's the best commodity play, but you have that overhang in terms of what is the promoter entity going to do next. Let's highlight what they've paid out so far. In FY25, we're only 6 months into this financial year, and they've already declared a dividend of closer on 35 rupees. The promoter entity, they stand to gain the most because they have nearly around 56% stake in the company. So that's important. And, you'll say, but why are they paying out dividend when they have such big capex plans? Vedanta Resources' core source of income is dividend, the brand fee that they get from both the listed entities, that's in the Sensex as well as Vedanta. And also when they sell some stake in these listed entities, they get some money out there. So the Vedanta Resources, debt obligation gets fulfilled with all these dividends. So that's the reason why they're doing this. For the time being, the stock is up close to around 0.5% or thereabouts.
Thank you so much, Nigel. It's one dividend after the other, but I believe this actually helps the parent company,
Indeed.
like you just mentioned. Moving on, market veteran Ramesh Damani says the Indian market is now transitioning from mid caps to large caps. He also shares his thoughts on the retail participation in the F&O market. Listen in.
जो सेबी की जो रिपोर्ट आई थी अभी 1-2 दिन पहले, वो बोल रहे थे कि retail public who has gone primarily into futures and option trading have lost money. उनके हिसाब से 90% have lost money, which is about a crore of people. 50,000 crore रुपया नुकसान किया उन्होंने. 50,000 crore रुपया उसने किया. 50,000 crore रुपये में could buy the complete Tata Elxsi or companies like Biocon. That is the amount of money they lost. So it is bittersweet. मुझे बहुत अच्छा लगता है कि Indian prosperity में Indians participate कर रहे हैं. I feel a bit sad that people are playing in the F&O market without understanding the market. Market is, bull markets have length. Bull market कोई permanently चलता नहीं है. कहीं ना कहीं जाके रुक ही जाता है. We are very lucky, we're very blessed, unlike China, Thailand, Japan, who haven't had new highs in almost a generation. Investors, Indians have constantly seen new highs in the market out there. So very blessed. Having said that, it just seems to me that the market is now transitioning from mid caps to large caps. Leadership has shifted in the market. And typically, if you have a very ferocious rally from this point, that would signal some sort of, ending of the bull market. मेरे को जो लगता है ये जो K-pop के जो shares आने हैं, Hyundai, Samsung, they'll all start coming with IPO soon in India because they're getting such valuations in India. So why won't they encash it out there? That will suck up a lot of market liquidity from the secondary market, and that would be kind of a warning sign of trouble ahead.
Well, some very important commentary coming in there from market veteran Ramesh Damani. Well, just having a look at, few of the stocks. First up, some time ago, we did the interview with IHH where they mentioned, about the open offer as far as Fortis Healthcare is concerned. Fortis Healthcare, is done quite well after that particular interview. In fact, the stock has seen a bit of a spike. The second stock on the radar, something that you highlighted even in the previous show was Manappuram Finance. Manappuram Finance, Money Control article suggests that they have gone ahead and put the IPO of the MFI arm, that is Asirwad Microfinance, and that particular IPO has been postponed. And in fact, that particular article also mentions that the company has confirmed to Money Control. MFI stress is something that they have alluded to, and also valuation mismatch. On the back of that, Manappuram, it's recovered, from the day's lowest point, but that's another stock that we mentioned. And Hero Moto, UBS has gone ahead and given a sell call. They have a very steep downside risk, from the current level. And that particular stock too, if you look at Hero Moto Corp's intraday chart, almost 2.5% lower. Anything on your radar?
Well, that's right. A couple of names that were actually fancied, and the investors, they like the outlook for these companies, IRDA as well as Bajaj Housing. If you pull up both those two stocks, IRDA, I think, is corrected from more than 300 rupees to around 220 rupees. As we speak, volumes picking up out there. The stock has seen a good recovery. Bajaj Housing Finance as well, it listed at around 130, 135, went all the way to 190. And now that stock, in fact, it's a correction. For the time being, though, it's pulling back a little bit from the day's low. So keep an eye out on that one. An easy trip, we need clarity from the promoter. What are they doing, with regard to their holding in the company, diversification of business as well. Stock got clonked yesterday. Today, in fact, it's pulling back a little bit, up close to around 5 to around 6% odd. But on that note, we'll wrap up on this edition of Chartbusters. That's it from Vivek as well as myself and the entire team that put this show together. Trading Hour comes up next.